All right, my friends, it's time for another episode of Crypto Q&A, which happens after Crypto Over Coffee every single week. Just a reminder, if you want one of your questions answered about cryptocurrency, digital assets, blockchains, financial services, economies, whatever it is, please ask them in the comments section of the YouTube video, or you can tweet me at Hashoshi4. I love getting questions from you and answering them on the show. That being said, make sure you're subscribed so you get a quick heads up whenever I post episodes like this. And with that, without further ado, first question. The first question is from Twitter, from Ada WMT. Thoughts on the new Ledger Stax wallet? Is it a proper hardware wallet, and how is it different to their other products? So Ledger, a company from France that manufactures what would arguably be the most popular hardware wallets on the market, just announced and they released pre-orders for a new wallet called Ledger Stax, S-T-A-X. Now, this Ledger Stax wallet is a huge departure from their traditional design language, which is a very small hardware wallet with a hinge design, small screen, small buttons, different form factor altogether from that. And the Ledger Stax is an e-ink display, so it's that black and white display you might see on like an old Kindle or on, a lot of old electronic devices had these e-ink displays. They're very low battery usage and very clear and very high contrast. Really useful. And it's in a smartphone type of form factor, albeit a very small smartphone form factor. I think it's probably a little bigger than the average credit card size, just based on what you can see. Now, you can't get your hands on one of these yet because it's a pre-order only device. So I will say my experience with this is very limited. I only know what information has been shared with me by Ledger. I only know what information is available to you. There are people who've gotten hands-on with it at conferences, and I'm assuming they're probably early production runs of the device. But what comes to mind right now for me right up front is that I think the Ledger Stax is going to fix one of the biggest issues I've ever had with Ledger wallets, and it's that the user experience, even with the app, the mobile app, and even with the desktop app, which are very nicely designed, the user experience sucks on Ledger wallets because the buttons are too darn small. Clicking around and dealing with and like not being able to use a touchscreen when everything we do is on phones and stuff just really is annoying, right? And I understand why. The other thing is it's really hard to verify transactions because you have this tiny little 1-inch screen on the device. So if I want to actually read what's going on in my transaction, it takes forever to do because the screen's so small. So the Ledger Stax is representative of them listening to customer feedback, including my own, which is that we want a smartphone form factor that's still portable, that can last a while on battery if it's got to have a battery, and beyond that, that it tightly integrates with your mobile and web applications, but I can actually use it to read the output of a transaction, to verify my addresses. It's going to be easy for me to actually use it because I've always said this, the easier a hardware wallet is to use, and without sacrificing security, the more it's going to be used. People avoid using things that are annoying to use. That's no surprise. So this wallet, I think, is going to fix that big issue. It has all the same trappings that you're normally used to: a secure element, limited connectivity, all that sort of thing for air-gapped use. And apparently it's going to have some NFT features, which I think will be really cool. I think the Ledger Nano X and S Plus also have those features, but I may be wrong on that. So the reality is I don't know enough about this to say, oh, it's a great wallet, oh, it's a bad wallet, because I've never used it yet. I'm going to get one as soon as it is made available, and I will test it out, and you'll get the classic Hashoshi review, experience on the wallet as soon as I get my hands on it. So that's my thought. I'll leave links to all the Ledger products in the description below. If you want to pre-order the Ledger Stax, you can do so through my link. It helps support the channel. But again, I'll do a review. If you want to wait for that review, that's completely up to you. All right. Next question. I've spent enough time on Ledger wallets here. Next question here is from Adam Collector on Twitter. What do you think would happen to the NFT industry if the SEC deemed them securities? So there will undoubtedly be NFTs that are deemed securities. I actually think that's probably already in process. I doubt every NFT is going to be made a security. I just don't think that there's a fit there for every single one. But if you look at how long it's taken for us to figure out what the heck a security is in terms of crypto and fungible assets, I don't think it's going to just be an instantaneous, oh yeah, all NFTs are securities one day. It's going to take a while. We're not even there for fungible tokens, okay? So I don't know that that's an imminent risk. Could happen. But let's be hypothetical and let's say that that materialized, all NFTs are deemed securities, it would destroy the NFT industry. Boldface. Because what it would do is it would mean, first of all, self-custody of securities is a whole other thing that I'm not even sure how it would work. There would need to be new rules around that, and I don't think there aren't many rules that exist. So self-custody would be pretty destructive there. Second thing would be very few organizations like an enterprise. We talk about all these enterprise, like the Starbucks thing with Polygon. All these enterprises that are doing NFT stuff are now issues of securities. Do you think they're going to do that? No way in hell. There's no way they're going to do that. Maybe some will, but very few will. So you'll see a lot of exit from project teams, big and small, from NFTs that don't want to deal with the regulatory headache. The other thing is then you're going to have a huge barrier for anyone who has an idea related to NFTs to do it, because they're going to have to register. They're going to have to go through the regulatory rigmarole of dealing with registration and dealing with the SEC and all that stuff. If you ask any project team today in crypto or in NFTs that is trying to follow the rules, they will tell you one of the biggest expenses that they have is following the rules. Lawyers, so attorneys, people that help them figure out what the heck they're supposed to do to comply with rules that are not clear. At least there would be clarity here, and that just means no one's going to do it in the US. That's the unfortunate reality. The NFT industry would probably survive elsewhere, though, unless it's also deemed a security everywhere, which who the heck knows. Thank you for your question. The next one, I lost my place here. The next one is from NZ Fabs on Twitter again. What do you think about Bitcoin mining and its relationships with oil and gas and renewable energies? Quite a controversial topic that could shape the future. So I have my own opinions about Bitcoin mining. And if you look at the trend based on data, and there are some Bitcoin mining research reports that are made out there, you'll see the trend line is increasingly moving towards renewable energy being used for Bitcoin mining. There are a couple of reasons for that. One, think about the main profit motivation that there is in Bitcoin mining. You want to have a lot of hash power, so you're going to need a lot of energy. Your profitability is determined by how likely you are to win a Bitcoin block subsidy, which currently is 6.25 Bitcoin, and that is less your costs of operations. So you have a unit cost per kilowatt hour of energy, which equates to a number of hashes or terahashes or whatever measure you are measuring your hash rate, your ability to guess hashes in the Bitcoin proof of work algorithm. The lower your unit cost is per hash, the more profitable you will be when you actually win a block reward, but also the longer you can operate without hitting a loss, the easier it is to break even. Renewable energies may require a little bit of an initial investment, but it reduces that unit cost of energy. And that's a reason why Bitcoin miners are incentivized to pursue renewable energy. Now, there's another question there, which is as we shift more and more towards renewable energy, and let's say all Bitcoin miners except a few are using renewable energy, what happens then when the cost of energy, so the cost of production for Bitcoin, because the cost of mining drives the price of Bitcoin because they need to make a profit. That's an economic force. What happens when the unit cost of mining Bitcoin, does it drop to near zero in a perfectly renewable energy, say we have nuclear fusion, or does it drop to unprecedentedly low levels because of sustainable energy, form of solar, geothermal, hydroelectric? What happens to the price of Bitcoin when the unit cost of energy is reduced and therefore the cost of issuance for Bitcoin is reduced? Does it affect the security? Does it affect the price? That's what's top of mind for me. The reality is Bitcoin mining today, because of the profit motivation, is moving towards renewable energy. Because of regulatory interests as well, it's very likely they will not have a choice but to move towards renewable energy. Hash rates and difficulty have been at all-time highs recently, so it's clear that miners are not just exiting the game. It's going to be really interesting to see what happens with this in the next 2 halving cycles. So I believe in the next 5 years, we're going to have a really interesting set of data, nearly 20 years of Bitcoin's existence there by that time, for us to say, here's what the future is likely to hold for Bitcoin and its relationship to energy and what effect it has on the cost of issuance, the price of Bitcoin, and its security model as well by proof of work. Really interesting stuff. I could talk for days about this, so maybe I'll catch a coffee at a meetup with some of you sometime. All right, next question from Crypto Zaf. What are some of the simple ways to help crypto adoption for non-initiated family members? I saw an example recently like Ballet Crypto. It might be one avenue. The reason I'm asking is because Christmas is around the corner and I'm thinking of gifting crypto. Well, what I will say is be careful with that. I don't even evangelize crypto to my own family because I know that they will not spend the time researching like I do. And no matter what, it's going to go down at some point, and then they're going to blame me for giving them financial advice, even though I'm not doing that. So I have a rule. I do not evangelize crypto to my family or friends unless I know that they are going to do the research and take responsibility for it themselves. I focus on educating them about what this all means, and then they can make their own decisions. I'm pretty sure that's what you're implying here. You're going to try and gift it to them, hoping that they will, either just hold on to it and forget about it, or they'll actually go and try and learn about it. Anyways, the best gift you can give to initiate family members, buy them a book. And if they're not readers, I guess don't buy them a book. But for my family at least, and for a lot of families that I know, if they're going to take the time to read the book, that at least tells me they're willing to take the time to learn the thing so that they can function in crypto and, actually do some research on their own and understand it before they put money in it. So that's what I would do, is I would buy them a book. Buy them Mastering Bitcoin and Mastering Ethereum as a set. It's a book by Andreas Antonopoulos. That's a great book for those who are a little bit more on the tech side of things. So say your mom or dad is a software engineer or in IT. Buy them that book. You're interested in crypto? Learn about how it works. You could also buy them some of these other books that are sort of beginner focused books around the economy and the history of money, where money came from, the challenges we have in central banking and fiat currencies, and where crypto has become a potential solution, but also acknowledging the challenges and the issues that there are. And there are some books out there like that. But if you want to gift crypto, what I've done in the past, I've gifted my brothers and sisters crypto before. I use Tangem wallets. They're these cards. They're like credit card form factor that are they're cold storage. Use an app as an interface and an NFC chip in your phone to store that crypto on a secure element, and then of course to sign those transactions from that cold storage as well on the card. So I really like those because it's an easy form factor to gift. You don't have to buy them an $80 hardware wallet in order to gift them some crypto, but you can encourage them to use cold storage with non-custodial approach. I believe Ballet Crypto does the same thing in a way, gifting in a non-custodial way. So that's a fine way of doing it. But my opinion is you should start with education and you should basically encourage them to understand why you're passionate about this and how to enter responsibly into the space. That's my opinion. All right, let's see. I think we have one more question here, and it's from Ertzman from Twitter also. How do you teach yourself to view the token separate from the product or lack thereof? Sometimes you love the product, but investing in the token is a mistake. Then what do we do? Just support with effort and invest in other ventures? ? So there are a few questions here, but let me try and answer them one by one. How do you teach yourself to separate a token from a product? And I talked about this a lot in my evaluation of projects in the past. Just because a product is successful or useful or solves a problem does not mean the token is going to accrue in value, because not all tokens are designed explicitly in system design to accrue in value. Because if they're trying to be used as a unit of payment or as a true utility, usually they're not structured to accrue in value to 100x, 1000x, etc. Some tokens are, but I would be very dubious of crypto tokens that are designed explicitly in tokenomics, deflationary economics, to pump in price. They're usually nonsense, and that is the product. The product is a pump and dump. That I would be very wary of. But if you separate the token from the product, you first have to think about the actual dynamics of the token. What is it used for? Is the token critical to the product being adopted? That's a big one. Can the problem that's being solved be solved without a token? The answer is usually yes. Unfortunately, it usually is yes. And while I and everybody else falls into that trap very often, which is it's cool to implement something with a token, it's usually not necessary. And that's just a fact. So if sometimes you love the product, but investing in it would be a mistake, what do? What you do is, and what I think will start to happen, is you can invest in the ecosystem around it. So if you believe that a certain product being built on Ethereum is going to be wildly successful, you can invest in the ecosystem around it. So you might be investing in tooling that exists. Maybe there are companies you can even invest in that are big parts of it. And I think you're going to start to see that more and more often, company-oriented investment being a part of crypto, not just tokens. Maybe I'm wrong on that, but I think we probably will, maybe through DAOs or some other structure. But if you love a product, but you don't love the token, it's token economics, you don't think the token is necessary, but you think it's going to have a broad impact to the industry, there may be other areas that you can invest to reap some of those rewards. Kind of the reverse idea of Arbitrum. People wanted to buy into the Arbitrum ecosystem. There's no tokens, so they buy into ecosystem coins, projects being built there. Same sort of idea. But again, just be very careful about buying tokens. It's super risky. People don't acknowledge those risks until bear markets, but it's always a risk, even in a bull. So how do you do it? Do you support with effort and invest in other ventures? Yeah, you can support them by participating in grant programs. You can work as a builder. You can work as a community member. Maybe it's too risky to invest in the token, but you want to just earn it. So put in a little bit of work. Earn the token. Don't buy it so that you're not risking a bunch of money. You're trading time for coins or tokens or whatever, but maybe that's your approach. I can't tell you exactly what to do, but what I would say is that top line question is important. You always have to separate the token from the product, because at the end of the day, a good product doesn't always mean a good token and a good investment. And I will also say a good token does not always get aligned to a good product. And when I say good token, as in token that's profitable, doesn't necessarily mean the product is right. The product is good. Many examples of that in crypto as well. So just be very wary of that. I would say, as a general rule of thumb, just like startups, 95% of all of crypto companies and ideas will fail. At one point or another, they will not work, and you will lose everything in that coin. And it's really important that people acknowledge those risks, because it's very often that we get excited in this space and we don't acknowledge those risks, but they are the same, if not worse, in crypto as they are in the traditional startup world. And that's something that we all have to be aware of. So with that, thank you so much for tuning in for Crypto Over Coffee's Q&A session for the week. Again, leave your questions in the comments on YouTube or tweet me at Hashoshi4. Hope you have a wonderful rest of the week. And until next time, cheers.